Welcome back to another technical analysis session with the SI. In this one, we are looking for some simple patterns which are powerful. Trading, it is complex, it is hard. No one says it's easy, but there are some indicators in the price action pattern which gives you an edge of understanding the market better so that you can take that possibility of trading. Now, if you understand the basic of what's happening here, that kind of gives you an advantage over the market because majority don't know this. And if you are ready, let's dive in. We say patterns are important. Say the price is actually coming lower. It is bouncing, then it is following that impulsive direction to the downside because here you're in a correction. But at one point, say this is your previous low, you are not coming back to touch that or you're not going lower. You bounce back up. And as you bounce, if you notice, this previous level of resistance where the price stopped previously is being broken here. Now you can see your retest is successful. So as you go up, you break that, you come back, you retest that and bounce. So as you break this particular level, which happens to be the previous support, that is the key indicator the market is reversing. But before that, it kind of gives you a signal. We are making a higher high. Right. Now, when you come on to this particular one, yes, you are trending lower. Again, the same pattern. You go up, you go down, then you continue downside. But at one point, the price slows down here. It's not going to the downside, making a new lower low. Rather, it's consolidating in one trading range. So if it's breaking to the upside, you just take it, plot it, you know which the direction is. And if it's to the downside, you know where it is going. But most likely, when it does this after a B, C correction, it is showing you there is a possibility that this may break to the upside. So if you take this market dynamics and put it here, so this is your wave 1 completed to the upside impulse, then wave 2 corrected up, now then third one, which is your wave 3. After these, when you actually get this lower high, yes, the trend is changing, you got that signal. Then you break to the downside, it's done, right? But some assets tend to show you this pattern. Then it go back up, retest your previous level and break it. So you're like, okay, this is like 1, 2, 3 wave structure, but how come this is actually going back up? Imagine, say this is 1 year of correction after 365 days. Because this 3 wave structure, it is actually happening inside the macro wave 1. So this is your wave structure in the micro term, so don't get confused. So once you're getting these 3 and then the price is breaking higher, that definitely gives you idea that okay, this one, that was just a micro structure. So that particular asset, when you're focusing on it, it gives you that understanding price is going to continue much higher. Then take the market condition right now. We have a market sentiment here. If you look at Bitcoin chart, you corrected down, you have this structure here where you went down. So you got your A, you got your B and you got your C. And at one point, price is consolidating inside this pattern. As we discussed here, the same dynamics is playing out here. Fine. So this is a daily chart. This is a daily chart pattern which you observe in the Bitcoin. So to get the clarity, you're now looking at the weekly. In weekly, you are focusing on the price action pattern. So as we look at this, you get an idea, okay, you got this long wick, the long shadow is there, fine. And then you got this, which is showing you the pressure is mounting to go to the upside. But right now, you got a candle open here, but traveling to the downside. Now that's a weekly candle and it has not closed yet. So don't be confused saying, okay, we are going bearish. Don't bring on that panic. That's not the time. Why? You look at these different scenarios, say scenario 1, 2, 3, because all of these plays out before that candle gets closed. 1, is this one. Say you are here where you are trending to the downside. Fine, now there is fear. But say in a couple of days, you see the price bounce back up and you get a wick here. So this is making this particular pattern. Before the candle closes, if it's managing to close like this, say this entire area is now just a wick and the price is moving to the upside, that's a continuation pattern which you get after this pattern. Imagine you're actually getting an inverted hammer pattern at the bottom of a correction. Usually that signals the next wave to the upside. So combining your candlestick pattern analysis or price action analysis into this pattern analysis of trend, you get the idea, because now you also combine the wave structure to understand where you are. Because if you zoom out, you can actually see Bitcoin in different wave structure. Now, a lot of guys will have difference of opinion, but what I want you to do is just go into a chart and ask yourself, what do you see? Do you see something else? Say on a weekly chart of Bitcoin, you may actually see this fluctuation happening, right? So if you are getting this here and then again this one, what do you expect? This is wave 1, this is wave 2. You may actually get this dip before you actually go up, but eventually you're going to do this. So you are trying to trade this market. You need to know what exactly the market is signaling you, because if you are just jumping on based on emotions and what others state you to do, you are in trouble. So when trading, it's not your emotion. What you want is understanding of the price action, the pattern and the trend, then combine them. That's when you get at least 50-60% of odds turning on your favor. If you liked this short TA segment, please do hit that like and subscribe button. And if you want to learn from another short TA segment, go to this video, or else if you want to listen to the fundamentals, current affairs and technical analysis, go to this one. Okay guys, bye-bye.